The crypto market is in a big mess right now. So many things are happening at the same time, thus propelling doubts about the future of crypto in general. But is this the end of a system that was once labeled to be the world's largest game changer? Is this the end of Bitcoin, which once offered many investors enormous returns on their investments? Perhaps everyone's fears were valid after all. Bitcoin has held firmly above the $26,000 level recently despite sharp sell-offs in equity markets and the surging US dollar. Meanwhile, the benchmark for the US stocks, the S&P 500, and the tech-heavy Nasdaq Composite Index plunged 2.7 and 3.2% respectively. According to a report from Into the Block, the steady price action was remarkable in light of the stock market taking a hit. The analytics firm further noted that potential reasons behind the stability that Bitcoin's correlation with the dollar index, or DXY for short, hit zero, meaning that there is no relationship between them at all. The number of long-term holders is now near an all-time high, according to Into the Block, which could be an indication that they are refusing to sell before a potential approval of a spot Bitcoin exchange traded fund in the US. Historically, these long-term investors have helped sustain prices during bear markets and take profits as new all-time highs are set in bull markets, the report stated. This trend appears to signal a bullish cycle for Bitcoin, which may be approaching. Though it is unclear how long Bitcoin's outperformance will last in a worsening macro environment, on-chain data does show that its long-term investors continue to accumulate regardless, it added. Nonetheless, it was noted in an email by Rachel Lynn, the CEO of derivatives decentralized exchange, Sin Futures, that Bitcoin climbed to as high as $27,400 ahead of the Federal Reserve meeting, but turned lower, witnessing strong selling pressures. Both the 200 weekly moving average and the 200 daily moving average are in the 27,800 level, likely acting as strong resistance in the coming weeks, she said, adding that the range between 26,000 and 26,500 acts as a support for prices. In the options market, 24,000 puts and 35,000 call options have the largest open interest, according to her. This suggests that the market still believes Bitcoin will stay in that range for the foreseeable future, she said. A string of events is happening, which is making it difficult to believe that Bitcoin could meet its demise anytime soon. We should never forget that Bitcoin is the leading cryptocurrency in the industry. Its collapse would be too great of a fall. So why don't we look at the present developments before concluding? The last thing that Bitcoin investors want to have right now is a heart attack. Recently, in its pursuit to build out crypto derivatives offering worldwide, Coinbase explored an acquisition of FTX's European entity following the exchange's November bankruptcy, according to certain documents. While acquisition talks have not been reached in the late stages, Coinbase's interest in FTX Europe demonstrates the growing importance of derivatives to its global business plan as spot trading volumes have tumbled during the last bear market. Crypto exchange Coinbase reportedly showed interest in acquiring the European subsidiary of bankrupt FTX on September 22nd. According to reports, Coinbase considered acquiring FTX Europe following its collapse last November, and continued to explore this possibility even into this month. The interest was part of Coinbase's strategy to expand its global presence in the crypto derivative market. So, has there been some peace lately? It can be deduced that the Brian Armstrong-led platform has always been looking for opportunities to strategically expand its businesses around the globe. However, other prominent crypto ventures such as Crypto.com, Trek Labs, and FTX FDM have also expressed a keen interest in acquiring FTX Europe. FTX Europe gained a significant advantage by obtaining a coveted derivatives trading license following the grant of Crypt Riot regulatory license. The license allowed the firm to be the only one to offer a popular form of crypto derivatives called perpetual futures in the European market. As a result, this development positions FTX Europe ahead of its competitors, especially those facing regulatory uncertainties in the United States. Earlier this year, Coinbase and another crypto exchange, Gemini, deemed it necessary to launch international crypto derivatives platforms catering to traders outside the US. This further underscores the budding importance of derivatives trading for crypto exchanges' business strategies. Moving forward, recent reports have noted that Google's cloud computing business is expanding its push into the blockchain, adding 11 networks, including Polygon, Optimism, and Polkadot, to its BigQuery program for public datasets. The business, Google Cloud, first published a post on February 2018 announcing that Bitcoin blockchain data was available for exploration through the program. Since then, 10 additional networks have been added, also including Ethereum, Litecoin, and even Dogecoin. BigQuery is a serverless and cost-effective enterprise data warehouse designed for practitioners of various coding skills, according to the program's website. So how is this going to benefit us? A key advantage, according to Google Cloud, is that users might be able to retrieve historical data from an off-chain provider faster than querying the blockchain directly. This announcement from Google Cloud came as a surprise, given that the industry is still being entangled in the crypto winter market malaise. In an interview, James Tromans, global head of Web3 Google Cloud, said that over the past 18 months, we've been investing in this space. We've continued to hire, we continue to grow not only our business development and our go-to-market teams, but also our product and engineering capabilities. We're beginning to show that we're not just fly-by-night and not just here when the time is going well. Other blockchains recently added to the BigQuery program include Avalanche, Ethereum, Kronos, Ethereum's Gorilla Test Network, Phantom Opera, Near, and Tron, according to a press release. Furthermore, Google Cloud said that it will also improve the Bitcoin BigQuery dataset by adding support from the Ordinals project, which exploded in popularity earlier this year as a way to generate NFTs on the largest and original blockchain network. As noted earlier, Google Cloud noted that the BigQuery program makes historical blockchain data available for exploration, designed to overcome the underlying network's limited capabilities for short-time scale reporting on specific or aggregated money flows stored in the ledger. Expanding the program to include more blockchains has also allowed for the multi-chain meta-analysis as well as integration with conventional financial record processing systems, the company said. Well, there is actually more to that. Prominent crypto exchange Binance and its CEO, Changpeng Zhao, has sought to dismiss the SEC's cryptocurrency lawsuit. Remember that the SEC accused Binance US of trading violations, but it denied the allegations. Now the legal battle hinges on regulatory authority and evidence, fueling the major questions doctrine. Binance and CEO CZ have formally requested the dismissal of the lawsuit. The legal action, initiated in June, accused Binance US associated with Binance Holdings Limited of trading unregistered securities in the form of cryptocurrencies for US investors. The case also alleged that market manipulation and wash trading. Most of the cryptocurrencies labeled as unregistered securities were delisted from the exchange. Cardano ADA was also a victim of this attack. Nevertheless, in a recent filing to United States District Court, both Binance Holding and Zhao contended that the SEC had overstepped its regulatory boundaries. Their legal team argued that the SEC's attempt to exert control over the cryptocurrency industry misrepresented the securities law's true intent. And this is going to be a long hassle, but if there is a win, the crypto industry can enjoy some level of peace. The filing read, in attempting to claim regulatory power over the crypto industry, the SEC distorts the text of the securities laws. In addition, Binance US, the American branch of the crypto exchange, filed a separate 56-page motion on the same day, seeking dismissal of the charges levied against it. The SEC had alleged that Binance US had misled investors regarding market manipulation prevention and facilitated wash trading through an undisclosed market-making trading firm, Sigma Chain, owned by CZ. Wash trading, according to securities laws, necessitates fraudulent intent to manipulate the market. However, the legal documents presented by Binance and Zhao asserted that the SEC's allegations lacked substantial supporting evidence and were sensationalized. They urged the court to dismiss the complaint. Furthermore, the filings argued that the SEC's claims were inconsistent with the major questions doctrine, which mandates that federal agencies await congressional authority over significant economic or political issues not explicitly outlined in legislation. Perhaps there could be a repeat of what happened to Ripple XRP. This cryptocurrency has long been labeled a security, but there was a partial victory when a judge recently dismissed the claims from a reasonable standpoint. Binance and CZ could also win this case. Above all, from these recent events, it can be seen that the crypto industry is vying to get out of its misery. Most cryptocurrencies are picking up in price and various institutions are being attracted. So to an extent, Bitcoin is not slacking. The thriving of most cryptocurrencies mainly depends on Bitcoin's performance. At the end of the day, there are going to be fruitful records. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons and we'll see you in the next video.